Hello, Warriors, prop traders at TopStep. I remember Danny Riley, the towering presence in the S&P pit. How's everyone doing today? My name is Dale Pinkert. I'm your host. We do this every day. Our webinar is called FACE. It's an acronym for ForexAnalytix, Community Experience, ForexAnalytix. Besides being the host, I'm the Chief Risk Manager. So make sure you're not using too much leverage. When you're hanging out with me, I'll blow you out. Anyway, appreciate everyone coming here today. This is our platform. And the only difference between what we're going to do today, I had a bad hair day. What we're going to do today and what we do every day is there's normally a guest. So I've interviewed some people that you probably know of, your own Mark Meadows and Danny when I was at FX Street, and people like Peter Bookvar and Mark Newton and some lesser known people, but you know, it's not the most famous people unless you give you hope that are the best traders. Sometimes they're the best marketers, not the best traders. So what we usually do is I'll start off and talk about what I'm seeing in the market, and then you're going to have a chance to meet the whole team. And I've been in the business, as you can tell, you know, trading has aged me. I'm only 29, but it's the best team I've ever been part of. And let me just give you a quick look at some people call the dream team. So here's our team, and you're going to be meeting most of them today. A lot of people know who Blake is, and Blake has helped a lot of traders over the years. You don't know how many people have said what Blake has taught them has been a game changer. Greg Horvat's going to be with us today. He's an Elliott Wave practitioner. I call him the Wizard of Waves. Stelios does a lot of our macro work, has one of the best hit rates of the whole crew. And Steve gives a great review of the board every morning. I could walk in and maybe not even have one idea, compelling idea to consider. And by the time Steve is through reviewing the board, there are things that maybe I didn't notice, or what's even better is the confluence of different work pointing towards the same outcome that happens here at ForexAnalytix, because in one place, there's Joe. Joe's appeared on Bloomberg multiple times. You're going to hear from Paul Franco, and Paul does a bias chart every day, a bit more shorter term, scalping type of market, and Paul makes his living off the market. And Blake's going to be here in 2 minutes. Andre Cardoso. Andre's a very talented technician, specializes in harmonics. And Andre's going to show you a little bit of his work today. And Amanda's not with us today, but you know, people love Amanda, not just because she's a nice woman, but because she's an awesome trader who milked the cable all the way down over the last year. She's been a dollar bull for a long time. A lot like Mark Meadows was bullish a dollar, and now we have a little interruption in that trend, in the dollar trend. So very strong team, and a lot of research goes into what we do on our platform. We call it the dashboard. So how many of you guys like Serge, who could drive their car without a dashboard? Maybe nowadays with self-driven cars, but this is what we call our dashboard. As you can tell, we cover multiple instruments. And Blake's going to go into the platform. And what's, I think, unique about us is if your cup of tea is Elliott for Euro Kiwi, You can pull up Elliott work from Grega. Here's harmonic work on the same instrument from Andre. Basic technical from both Blake and Steve. Candlesticks from both Blake and Steve. And macro analysis from Stelios. So like I said, the confluence of opinions, when you see a lot of things line up where you have different methodologies pointing towards a similar outcome, I don't know what it would do for you, but it gives me more conviction about pulling the trigger. And what's even more important is if you have a good sounding board, I teach surround yourself by traders better than you, and you'll rise to that level. And I know I've become a better trader the last almost 3 years that I've been part of this team just through osmosis. And I'll give you an example. For example, today, we have all the markets blowing to new highs, right? I'm kind of looking for this wedge line on the weekly in NASDAQ. But, I also have another tool, and it's a recent thing I've added to my analysis of markets, and it's something, I've been with Blake for a while. I remember even interviewing Blake when I was on FX Street, but it's the Mexican peso, and he gave a great explanation of it being a carry trade. And, you'll see US dollar MEX heading down when you have risk on. Okay, so we're starting to get some signs, even with the market at new highs. At today's low, we still have not made new lows. This is what I do a lot of things with RSI. I've renamed it from the relative strength index to the real simple implicator, because I'm a believer that markets, when they confirm highs, momentum confirms highs and lows, they're rarely the high or the low, and that's actionable to me. And with Blake's work and Steve's work and Elliott's and Grega's work, just really the whole team, we really have a lot of great content to share with you free every morning from 8 a.m. Eastern time. 8 a.m. Eastern time till 9:30. Usually includes the last segment's an interview. So who knows? One of you prop traders, you're on Twitter, maybe I'll interview you and you could talk about your experience through TopStep. If anyone tries to tell you they have the secret to trading, let me tell you the secret is this: hard work, perseverance, and living through adversity. You can't learn experience. It only happens with the passing of time and living through stuff. Ask any trader. So just like you have to be patient with the markets and wait for setups, please learn to be patient with yourself. Okay, so what we would do is right now I would bring Blake in, and Blake Morrow is one of the best traders I know. So I learn from Blake all the time, and he gives me a lot of clarity. We don't always agree, but here's a guy that trades for a fund. So that could be your future too. You develop as a trader, you end up with a fund. Just like as a prop trader, you end up with capital to trade, and you get your percentage. So I think it's a great thing that the guys at TopStep are doing for people that aren't blue bloods, that aren't trust fund babies, but want to try their hand at this and have a love for trading. Don't do it for the money. Do it because you like it and you love it, not just for the money. If you do it because you enjoy it, the money will come. Okay, so that's the end of my lecture for now, and I'm pleased to introduce my compadre and one of my teammates, and we're all pretty tight family here, Blake Morrow, to you.
Hey Dale, how you doing?
Good, Blake. How are you, buddy? I first time you saw me with the hat on.
Yeah.
Huh?
Very nice. Very
Huh?
nice. Where did it go?
Huh?
Where did it go?
Well, I'm not a hat guy because I have such cool gray hair. I don't want to cover it up. But,
yeah, dude, if I had
You know,
that silver fox stuff going on, I would do it too.
Anyway.
Hey, I want to welcome everybody, and thanks for having thanks for being here with us today. And Dale is our host, but you know, Dale's got a wealth of knowledge, and that's the one thing that that I think everybody here should understand, that our team, including Dale may be a great host, and he is, but he's also got a wealth of knowledge. He's been in the markets for, we always said 400 years, but you say 40. I said 400, right?
Some days it feels like 400, Blake.
Anyway,
now it feels like 4 hours, man. I'm using my 4-hour chart. So go ahead.
Okay. Well, hey, you know, I can't grab the screen, but what I want to do is I want to show you guys the platform a little bit, and I want to tell you about myself. So I think you have to hit stop sharing.
Okay.
Yeah, I can't do it until you stop sharing.
There you go, buddy.
Okay, so let me go ahead and grab my screen here. But I'm going to tell you guys, I was going to tell you guys a little bit about myself, but you know, it's we don't have a whole lot of time together, and we don't have a whole lot of time together, so I didn't want to spend a lot of time talking about myself. There's an interview. Aaron from Chat with Traders, he did an interview which is over an hour about me and like where I started, and I think I could grab a link for you guys. I'll do that and grab it for you and put it in the chat box. Let me see. I think this is it. Let me go ahead and just put it in the chat box for you. So this way you guys can, you know, kind of have a background of who I am and what I've done. Let me figure out how do I get over to the chat.
Just put it on Skype, Blake, and I'll take care of it.
Okay, I'll do that. Here you go. It's an interview. If you guys want, you know, to understand how I got my start in the business, so this way I don't have to bore you with all the nitty gritty details. But I've been doing this for a long time. I currently, aside from starting ForexAnalytix and, you know, being on this team, I actually trade for a firm out of Greenwich, Connecticut, called Gellos Capital. Some of you may follow the principal there, FX Macro, on Twitter. I've been trading with him and his very, very small group of traders. They have a pretty elite group that I was fortunate enough to join, and I've been trading for him and his partner for several years now. And but also, obviously, I'm part of the ForexAnalytix team, you know, being one of the co-founders. Interesting thing is I actually started developing this with Steve, and you're going to meet Stelios. You just heard Steve. You'll meet Stelios as well. Started developing ForexAnalytix several years ago, and as I was in the development process of this platform, I got invited to trade with this firm, and so they support me in what I do with ForexAnalytix. Plus, I trade pretty large size in the FX market. I trade through JP Morgan. I trade it on institutional platforms. I use Barclays as a backup, and I have a Bloom. You know, if you guys are familiar, I got like Bloomberg on my system, you know, at home here. So at my home office, because I live in Arizona. I live in Scottsdale, Arizona. I do not live in Greenwich. So I'm one of actually two traders that they have that work. We work remotely. So we were connected all day long through my firm, through Bloomberg, and then also Skype into their office every day. But like I said, I trade through them, and I also help manage the ForexAnalytix platform, and I'm involved every day on the daily webinars. And that's something that that you guys that are from TopStep, we really want to let you know that we do broadcast every single morning. Dale brings in some great interviews. I know he just talked about it, but it's something that you guys can tune into every single day. And Steve, Dale, I know you guys are going to provide a link for the traders that are listening in. Okay, and make sure you guys get registered and listen to us every day, especially if you're trading. If you're trading FX, awesome. We also cover the indices. We cover a lot of the big markets, like, you know, whether you're talking about gold or crude. We talk about bigger the main indices, and a lot of macro ideas and a lot of actionable ideas too. Because when we're broadcasting, we broadcast through a lot of the North American news events, whether it's non-farm payroll, whether it's CPI or whatever data that's being released. We have webinars throughout the day, and Paul Franco, who you're going to meet lastly, so you guys need to stick around here till the very end. He also broadcasts a webinar that's specifically for our dedicated users. So make sure you listen to Paul. He's awesome. One of the things that I pride myself on is putting together such a great team. Everybody from Dale, who you just heard of, and then Paul, to Andre, to Grego Horvat, and to my partners, and to Amanda, who's in our chat room, who really manages our chat room. We have, and then Joe out of New Jersey. We put together a really good team of a lot of talent that's available to you. So what I want to talk about here for a little bit is, and then I'm going to talk about my methodology and how I trade. I'm just going to take a few minutes to talk about the platform itself. So the ForexAnalytix platform is really what you see here is the main platform. Now, keeping in mind, this platform is also on mobile devices too. So if you have a tablet or you have an iPhone or a Galaxy, it's in the iTunes store, in the Google Play Store. So this way you have all of our analysis at your fingertips, not just on your trading platform that you use, or your desktop that you're trading on. Me personally, I don't like to enter the markets when I'm mobile. Usually when I'm mobile, I manage what I've got open. Since I'm predominantly trading FX, it's 24 hours a day, as you guys know. So I'm usually just more managing positions versus entering into positions. However, when we send out analysis, whether it's intraday analysis, as you can see, like if you go over to update history, you can see when some of the macro analysis was released, or the harmonic analysis was released for the Kiwi dollar about 45 minutes ago from Andre. When this analysis is pushed and you can read up on what one of our team members had to say, it comes to your mobile device and it gives you a push notification, which is awesome, because if you are mobile, you get to see the charts and the analysis that go along with the chart, which for me, trading from my mobile device is very difficult, I find. Maybe it's just because I'm nearing 50 years old and I can't see all that well anymore on these little phones. But for me, it's easier if I'm trading just in front of my desktop. But when I get updates, it can inform me of what's going on, but also that there might actually be a trading opportunity that comes available on one of the instruments that we follow. So that's kind of nice as far as having a mobile app. So, and then also what you'll notice here is these support and resistance levels. These are manually inputted by our team. So when we manually input these levels every day, when those levels are breached, whether it's a support or resistance level, or maybe the bull bear line in a currency pair, which bull bear line is, hey, as long as it's above this, we're bullish. If it's below that, we're bearish. That's what we call the bull bear line. If one of those levels get tripped, you can also get notified via mobile device. Now, one of the other things that I want to just quickly cover in settings is all these currency pairs. Like if you go to notifications and you look at all these pairs that we have here, you can actually custom grab what currency pairs you want to be notified on, whether it's email, browser, or your mobile device notifications as well. It's really cool because you may not trade certain pairs, but there's certain pairs that you really focus on, and you can make those predominant notifications for you on all of your devices that you're using. So this way you're not bogged down with notifications on everything. We default with everything, but that doesn't mean that you have to keep them there. Now, one of the things that you just saw pop up here, and I'll pull it up right. Let me grab the data flash here. So this data flash is this data flash is the ability to be notified when there's a news event being released. So this data flash is a really cool feature that Steve brought to ForexAnalytix, that it moves almost, and it releases information and data almost as quick as my Bloomberg economic calendar, which, as you guys know, most of the algorithms are tuned in off of Bloomberg data because it's so fast. Well, the data flash is almost equivalent of that. I would say some cases it is equivalent, which is nice because you get to see the data as it's coming out. It'll flash and tell you if it was a beat or a miss, and also it'll give you verbal cues as well, audio cues, which is a nice feature. Now I'm going to minimize that for now just to get it out of the way. But what you're looking at here is the basic. I like to call it the overview screen, but some people call it the traffic light screen. And Dale, what did you call it earlier? I think you called it the
Dashboard.
The dashboard, yeah, the dashboard. So we have different nomenclature or the ways we call this, but I like it as just a basic overview screen because it gives you the bullish, bearish, or range nature of each different analysis type that we have, whether it's macro, candlestick, basic technical analysis, harmonic, Elliott wave. Now you'll notice if you go to like the dollar index, it's bearish by all analysis types right now. And if you go to like silver, for example, silver is getting pretty bullish. Crude oil bullish almost across the board. S&Ps wherever they went, they're pretty similar. But the way we looked at it is the more analysis types that you have that's in line with each other, the better the predominant trend. And for you as a trader, then you can really just kind of focus on your entries as far as that the trend is higher, the trend is lower. Now you can focus on your entries on when you might be able to get in. And that's when you might say, okay, regarding the dollar index, I'm going to look at basic technical analysis, and I realize that I'm approaching a trend line support and a lot of horizontal support. I might be looking for an entry, or in this case it would be short, but you're attacking some support here, but you might be approaching some sort of resistance that you might be able to sell strength in the dollar index. Or you might look at an Elliott wave pattern and say, okay, the dollar index might actually rally to a wave 4 back at 97.50 before rolling over again. But that's and then you read the team members analysis. The one thing that I'm really proud about by putting together this team of traders that we have here is that when we started, we made it really clear that the analysis that you do should be your own analysis. It's not, don't let my analysis influence your Elliott wave count, or or the harmonic analysis interfere with my basic technical analysis. We all have our own analysis, and a lot of times our analysis might be conflicting, but that's okay because that's what makes a market. But when you can get all these analysis types going the same direction, that gives us more confidence that we might be in a stronger bullish or bearish trend. And that's where you can see like the long-term, short-term ForexAnalytix biases. These bias arrows are a culmination of all the different analysis and charts that have been uploaded for that particular instrument to help give you a stronger bias one direction or the other. As you know, we've been in a lot of kind of choppy markets recently, and you can see that in a lot of these long-term biases. But believe me, over the last several years, I've seen them fluctuate, quite dramatically, where we see really strong trends develop in the market, and they'll come through on the ForexAnalytix platform. Now, there's a lot more other features that I just want to quickly cover, but this is the main overview page, or whatever you want to call it. We have what you'll notice here is active patterns in play and closed patterns in play. Now, we've been accumulating over the last nearly 3 years, patterns in the market that we view as more textbook type of patterns, whether it's a bull flag pattern or an AB equals CD type of pattern. We might initiate a pattern in play, and the pattern in play is similar to, like, it's a trade setup by the book. And I trade a lot of these setups. Like, for example, I happen to be long the euro dollar, and I've been long for the last week based on this pattern in play. I personally am trading long the euro dollar right now, and that is a pattern in play because we had a descending wedge that actually broke out, and you guys can see that it was a big descending wedge, and when we broke out, over the course of the last week and a half, I got very bullish on the euro, and that's the example of what you would see in a pattern in play. As you'd see it show up here. We don't do them all. Obviously, we're taking in other things into consideration, whether it's the macro environment or some news event that might influence the market. But we try to just keep them more to textbook type of patterns that you would see. And you'll see in the close pattern in play over the last several years we've been doing this, you can see all the statistics that we have. Now you can go through pages and pages and pages of patterns in play. You can go, here's page 5, you can go to page 7, you can go to, we keep them in here, and they're all real time. They go in real time. If they get invalidated, or we move up the stops, or we move, we move a limit, there's adjustments that go through all of these patterns, and you can see the profitability. There's obviously losses, and you can see the average win rate, losing percentage in pips, what the average risk reward is for patterns in play that we put into. But this is available to our subscribers of ForexAnalytix. So I think it's a great guide for you. Like if you're looking at this pattern in play in the euro dollar and I'm bullish, you can say, well, Blake's bullish the euro. That doesn't necessarily mean you need to buy it, but that means that, hey, I have more of a bullish bias, and I might need to pay attention to that. Now, a couple other things that I wanted to talk about before I pass it over to my colleagues. I didn't want to take up all the time, but ForexAnalytix is very customizable. We have a live stream of obviously news between Rand Squawk, updates that we do, and this is a live stream that captures the last 3 days worth of information, and we let it drop off after that. You have a live calendar from investing.com that you can customize, and you can see different events and for what regions and what countries. You can put different filters on it. You can see the update history when we've done updates for each individual currency pair. You can see alert histories. We will issue sometimes alerts before big events. Matter of fact, in 3 minutes, we have Christine Lagarde, who's now helming the ECB. It's going to be her first speech here in just a few minutes. So, but we issue a lot of alerts, whether it's a new pattern in play or whether there's a news event coming. Your Twitter, you can actually customize this and put any handle that you want. We preset it with a bunch of basic handles, but you can go through your settings and actually input personal ones. So this way you don't have to keep going to TweetDeck or Twitter, or you can just have it all here. We have different links to different news articles that might be prevalent to what you're dealing with in the currency market. We have a risk management calculator if you want to calculate how much risk you're taking in the market. This is actually a very valuable tool for me. I'll put in like, I've got to stop at 110 and an entry at 111.40, and I'm looking at a target of 114, and I'm trading 3 million in currency. And then I'll know that I have a risk reward of 1.86 to 1, and I'm looking at a loss of 37,000 and a gain of 70 grand. And I know that right off the top, just with the risk management calculator. It's kind of a nice tool to have. There are a lot of other features that we have to ForexAnalytix as well, and just realize that it's all customizable. You got to download the mobile app. That's very important to have. We have a lot of webinars that we do throughout the course throughout the week. We have a lot of interviews that Dale does, and we upload them all here. And we also have a blog for anybody who's not a subscriber, and you'll see the chart of the day that I post every single day. But you're notified of all of this analysis if you're part of our community as it is. One other thing I'm gonna say before I pass it over to my colleagues is what you're going to learn about our team is in our community is we have a very big community of traders. One of the things that you'll notice here is right next to your icon, your name, you'll see it right here. It says go to chat room. This chat room, and as you're going to see right here. This is our chat room that you'll find myself and a lot of our other team and a lot of really great traders. Some of these traders in here I've been chatting with in chat rooms for over 10 years. No joke. They've been with me from previous organizations and they followed me all the way over here. And you can see even right now when it's slow, we have 67 people in here, but usually when it's busier in the morning, like early New York time, like 5, 6 in the morning New York time, there's about 100 people in there. Throughout the course of the day. So that chat room is where you're going to find myself, Steve, Amanda, who's not with us today, but she's in the chat room all the time. You'll see Stelios in there a lot, and we're chatting throughout the course of the day, and that's where you're going to be able to say, hey, what are you thinking about this? Or you're also going to get a lot of input from traders that trade for a living that also are in that chat room. It's a very safe place because we don't tolerate political talk. We don't tolerate any aggressive talk, and we don't allow anybody to sell anything in there. So
it's a mastermind, Blake. I mean, it's a confluence of all these different ideas. And look, as a trader, we only have 2 eyes. So if you're part of a community, 1 + 1 can equal 11.
Correct, and that's the thing. That's the thing about that chat room is it's so valuable because I get a lot of my trade ideas from that chat room because I wasn't looking at the Aussie Canadian, and somebody pulled up the Aussie Canadian and said, "Hey, check out this chart. Look, we're sitting on this 618 fib, and we got the RBA tonight. It might be something that you should look at." And it's like, oh wow, I should have been paying really close attention to that. So that chat room is an extremely valuable tool, especially for those of you that trade. I know you guys are all prop traders here from TopStep, so it'll be a valuable place for you guys to be. And like I said, I've been trading with some of those traders in there for 5, 8, 10, 20, not 20, 10 years. I was going to say 12, but it came out as 20. But a lot of years. Some of them I've been in chat rooms with for that amount of time, and they're it's all part of the ForexAnalytix community, or what Dale likes to call the FACE community. So anyway, exciting stuff, guys and gals. If you're listening in from TopStep, I want to welcome you to our community. I pride myself on the team that I have here and the community that we've all put together, and I hope that you guys will enjoy being part of it. I know we have a special offer for the TopStep traders, and I'll let Dale talk about that in a little bit. But we look forward to having you involved in our community. And one of the last things that I should say about myself really quick before I go, because I'd mentioned it earlier. I trade with very basic technical analysis. I've been trading for since '96, and the charts that I look at today are the same charts I looked at back in '96, and I still use the same fibs and look for the same confluences, and I trade very much in the same fashion that I have. And so that's one thing that I think traders have always appreciated with me over the years, is that they know what they're going to get with the way that I trade, whether I'm scalping the market or whether I'm taking a little bit longer term view. Like I have a macro thesis on why I'm short the dollar or long the dollar, whatever the case may be, and I'm going to stick it out for the next, week or 2 weeks. People know the technical reasons why I'm doing it because, like I said, my charts don't change. I look at the same trend lines and the same RSI and the same, everybody knows what to expect from me. So, anyway, with that being said, I'm going to pass it over to one of my partners, Stelios, and I'll let him say his last name because I always call it Stelios Kanto, but it's Kantagoulas. Did I do that right, Stelios?
That was
kind
Actually,
of.
yeah.
It was not too bad, right? No,
not bad, not bad.
For a non-Greek guy.
Hopa.
So if you guys don't know, we have a couple Greeks in the ForexAnalytix team, and I'll let Stelios talk a little bit about himself and how he got here, and he's our macro mind behind ForexAnalytix. So without further ado, I'm going to pass it over to you, Stel.
Thank you very much.
And by the way, I think I have to click stop share, and maybe Dale can grab the charts for this, unless you have charts you want to show.
I cannot start screen share while
you have to stop. Well, I'll do it.
Here, I just stopped.
Okay.
It's different than our other Zoom.
Okay.
So you got to take it over here, Dale.
Okay.
Hold on. Why isn't it sharing my screen?
Okay, so here, share.
Huh. It won't allow me to share my screen. No, this is not good.
Okay.
Really?
Yeah. Hold on a second.
So just so everybody knows, we use Zoom every day.
There we go.
You got it?
Hold on.
This Zoom experience has been a little different than the one that we do every single day, which is interesting.
Here it comes.
Hey, there
you go.
There you are. Yeah.
Okay. All right, perfect. So let me close this.
Oh, and Blake, thanks for telling me about Christine Lagarde, because I'm taking down my Janet Yellen poster and replacing it with Christine Lagarde.
Okay.
You mean your Mario Draghi poster?
There we go.
Oh, come on. Let's not tell the TopStep guys that yet, okay?
Okay.
All right. Okay, well, thank you, Blake and Dale and everybody. So before I start, I just want to very quickly introduce myself. I'm Stelios, and I have a very peculiar background. I started as what I like to call being an IT monkey. I used to program a lot of coding, and then while I worked for Accenture at some point as an IT consultant. Anyway, at that time, I did my first ever trade, which was actually Greek stocks. I liked it quite a bit, and then after a while, I did an MBA and switched completely careers. So I became a trader in London. I worked for a couple of big banks, and I was a derivatives trader. I traded interest rates. I was a market maker for just under 10 years. It was great. It was. I went through the crisis, did actually quite well during the difficult years, and then when I came back home to Greece to start a family, I met up with Steve and Blake, and we started this wonderful project. So I am like Blake said, I am the macro specialist, let's say, of the team. So I like to take a step back or 10 steps back, bring out the binoculars and see what's happening. I trade much less frequently than these other guys do. And I take much, let's say, longer term trades with bigger risks and, well, bigger rewards, let's say, but also obviously bigger risks. And so what do? I look at the big picture. So for example, I look at the dollar index, which is where I usually start. And so for example, in this occasion, you have the dollar index, which has been actually since the Federal Reserve started cutting rates, when it did a 180-degree turn in late 2018 from being slightly hawkish and going through quantitative tightening to actually turning around and starting cutting rates. And you can see in this chart that the dollar index has actually been quite flat during that time, and that for me has been quite interesting. I personally think that the dollar will continue, or let's say will turn lower in the medium term, next 12 to 18 months, because the US economy is turning south. We're seeing all the leading indicators turn for the worse, and there are also some pretty big big events that we're waiting for. The US-China trade deal. Is it happening? Is it not happening? It seems that the President Trump is waging quite a few wars and on all fronts. So it's a very interesting thing to look at.
Bringing that up, Stel, there's
Yeah.
a November 14th date for possible opening another front in the trade war. What's your gut telling you? I've read some things that because the market is at all-time highs,
Yes.
the president may feel confident enough to open up a new front in the trade war. What do you think?
Well, he could do that. We have to remind ourselves that he keeps aligning himself with the stock markets. So he's, I think he's a smart man. He doesn't want to put too many obstacles. So, you have the US-China trade war. If he opens up another front, then that's going to bring another potential issue for stocks, because let's face it, at some point stocks will have to face reality. And let's have a look at the S&P chart. They have to face reality, and at some point we're going to have a correction. So I think you're right. There is a chance, this is something he could do, but I think at the end of the day, he will want stock markets to be performing well, simply because he is, like I said before, aligning himself with them. And at least until the elections, I don't think he wants to see a big drawdown in equities. And speaking of equities, we look at the S&P chart, and it's just been a straight line from 2009 onwards. And okay, in the beginning, we had a reversal because we had a big crisis and things stabilized. And of course, there was more positivity in the market. So that was justified. But then we've had, we've talked about this on Face so many times. We've had the last 4 or 5 years where the market is just grinding slowly higher. And based on what? Fundamentals? No, it's been because we've had zero rates. It's been extremely cheap to borrow funds. You have big corporates who are borrowing, even Apple, sitting on a huge pile of cash. They issued bonds and they take the proceeds and they buy back their own stock. So we've seen equity indices gunning for new all-time highs, mostly on the back of equity buybacks, which is
financial engineering.
Yes, exactly. It's not a healthy sign. You will have that, of course, but you can't have the biggest buyer in the market being corporates themselves. It's not healthy. It's not normal. So
tell Japan.
Yes. Well, they've had zero growth for decades, right? But
their government owns half the stock market now.
They own all the bonds and all the stocks or something like that. Yeah. So good point. But I think personally we should see a correction at some point. I've had an argument with some people about how deep the correction can be. I think that because central banks this time around will know exactly what to do, as in negative rates, QE till the cows come home. I think any downturn is going to be, I don't want to say small, but it's not going to be this 70% drop we saw, or even more. Was it in 2008? The S&P went to 666 points, right? So it's
there is an adage saying the generals are always prepared to fight the previous war.
Yeah, that's true. That's true. But they have a bit more experience now. They know what to do. But the question is QE and zero rates effective? It has been used extensively over the past decade.
I think the best argument to answer that is if it was effective, we wouldn't be at QE4 at the moment. We would just have had one QE.
Yes, it's supposed to be an extraordinary tool to be used sparingly and only for a short period of time. And 10 years later, here we are. So, it is, the equity markets are very interesting, and because it kind of doesn't make sense for them to be rallying like they are, a lot of people short them. So you have this continuous, gradual short squeeze, which is just taking shorts out over and over again. So it's a very interesting market, and this is just some of the thoughts I have when I look at these markets, and then I can probably go and talk about my favorite.
Of course, we cover every day the Brexit saga, and
Yes. I mean, we've talked actually.
Every fundamental development.
Yes, I mean we've been talking about the UK naturally because we've had the last 2.5 years after the referendum. It's been very bumpy, and there's been so many scenarios, and it's still ongoing, of course. But I drew this chart months ago, and I was saying, look, I think we have, I think it was, it was like middle of this year or 4 or 5 months ago, and I really thought there would be one last push, and then there would be a gradual convergence to some kind of a deal, agreement, whatever you want to call it. And Boris Johnson, to his credit, as soon as he took over, things started moving a little bit. We had Theresa May for 2 years achieving basically nothing, and Boris Johnson came in, and he only had a short time to get something done. And from day one, you could see the sentiment slowly changing. I'm not saying that the no-deal Brexit scenario is off the table, far from it. But I've always said I thought the probability of that happening was lower than the market was pricing. There was a point only a couple of months ago when everybody was saying, "Oh, this is it. The UK is leaving, no deal. It's going to be, the pound's going to go to over parity with the euro and more." And I always said, look, there's going to be some kind of gradual movement towards an agreement, and we're seeing it slowly. There was both sides are trying to compromise now. Obviously we have to get it we had to get it through Parliament. It didn't work, so we're having elections now, and this is as we've said on the webinar before, this is a chance for the UK people to effectively have another vote on the referendum, because there's two sides to it, one which is a Remain side and a Leave side, effectively, in the UK party. So this is the kind of stuff we look at. I always like to look at, I have an opinion about markets, but I always like to look at what the markets are pricing for every event. And if something diverges a lot from what I think, then it's a trade that I usually put on. So
there are some long-term junctures where risk reward is asymmetrical. I mean, we kept warning on the webinar, all of us actually, some time ago, that people being short the cable are looking to pick up pennies in front of an upcoming train potentially.
Yes.
And unfortunately, we got verification that a lot of people were actually run over by what happened in the markets, because we do have contacts with brokers, and we know that a lot of people got caught being at the totally wrong side of the market and very convinced about it, and they got destroyed literally. And we were warning in advance that, and you caught the top in euro pounds. People that have been attending FACE, they know that there is also a pattern in play to testify that. And we kept warning after the initial warning from the market, the initial jump higher, that listen, be careful, this is not an outlier. We might have a continuation here towards 130. And people were still extremely skeptical, and they were trying to short every single rebound. And we now know how that worked out.
Yeah, I think as with every market, you can be right with trading both sides, as long as you are diligent and disciplined with your stops. End of story. That's how there have been people who have been short the pound in the last 2-3 months and have made good money because they've been very disciplined with taking a loss when it's not going your way and moving on, or running it when it is. So
That is very correct.
That's
risk reward is key. Absolutely.
Yes, absolutely. So that's
it's all about TFs, guys, right?
Yes,
absolutely.
So you could be right long term and wrong short term, and someone trading a counter trend could pick up money. And you know what? People could be on both sides of the market and both be wrong. Seen that too.
Yep, absolutely.
Okay, so
that's my kind of thinking, and that's roughly what I do. So I hope that was helpful. And
let's jump to technical analysis.
And Stel's a Renaissance man. He even went out and bought some Fitbit before it exploded. So he doesn't limit himself to currency.
I love the product. I have the watch.
I bet you love it even more now, because
you're kind of like the Arnold Schwarzenegger of Greece, aren't you?
I'll be back. Yeah. Okay. So I'm going to pass it over to you, Steve. The other Greek with the different accent than I have.
The real Greek, yeah. You're the Greek with the British accent, and here comes Zorba.
Okay, so I'm going to stop sharing so you can take over.
Okay, Stel.
Great.
Hi, Steve.
Okay. Hey, Dale. Long time no see, right? I'm kidding, of course. Okay. So, I'm Steve Bulgaridis. I'm, no need to go into, a lot of details. I've been doing that for, I guess, a little bit more than 10 years. I've studied management and finance, so I have both degrees in both. And I was quite fascinated with finance, from like my university years and economics. But I ended up being mostly a technical trader. I mean, I do follow the fundamentals quite closely, and I do have quite a strong opinion on economics. But as was mentioned before, making money by trading fundamentals isn't easy. You need to have a very specific trading style. You need to have extreme patience. You need to have the ability to have large stop losses and large targets. I'm more of a swing trader, by the way, and with Blake we do the basic technical analysis on ForexAnalytix. So Grega, do you happen to be with us so we can do this together? Grega is our Elliott wave specialist. So, and very frequently we like to present things together because it's very nice to see. I mean, I know some Elliott waves as well, so it's nice to see when basic technical analysis and Elliott waves and harmonics confluence. Actually, that is what we specialize on, to take advantage of opportunities when there is a synastry of opinions. So when you see that most indications pinpoint to a specific direction, you have a higher conviction that actually this can work out. So Grega, if
hello
you're
everyone. Hello, Steve.
there you go. Hey mate.
Yes, I'm here.
Nice to have you. So Grega is one of the best. I mean, I'm going to say it because he's not going to say it himself. He's one of the best Elliott wave people on the planet, and there are not too many of them, but definitely he is in the elite. I mean, people that follow him either on Twitter or have been clients of ForexAnalytix or his company know that he's a lot more frequently right than wrong. So Grega, I thought, I mean, we've done an interview together as well on Real Vision, so I thought we could do something equivalent here on the webinar. So what I would want to do is pinpoint a couple of markets, and what I see here, some key markets that I know that the vast majority of people pay attention to, or some things that I see as being in key levels and or at critical points to decide if they want to move higher or lower. So I can show you what I think about it, and then you can give us your feedback about it. So I'm going to start with the S&P. I know that a lot of people focus on what's happening with risk. I mean, we've had another explosion higher. Almost everything, and I say almost everything because don't forget that the Russell is still lagging. The rest of the US stock indices is trading at all-time highs. But I have a little bit of a conservation here, and the reason is because I do see this ascending wedge here on the S&P, which confluences very nicely with another couple of resistance areas, actually both of them extensions of corrective moves. One of them with the corrective move we had from the September 2018 high to the December 2018 low, and the other one from the recent pullback that we had here. All of those levels more or less confluence between 3,100 and 3,125. So bottom line here, I do acknowledge that definitely we do see the bullish trend being in full effect, but we can also witness that momentum has waned since September of 2018, and I do believe that it is critical for the market to manage to pass through that confluence of areas if it actually wants to explode higher for perhaps what I'm assuming will be one last hurrah from this during this business cycle before we get in some type of a bear market. Now, the other key chart that I'm monitoring is what's happening with the dollar. So, we've had the DXY bottom out in the beginning of 2018, and we have been in an uptrend since, defined by the simplest method to do that, which is a series of higher lows. But what also is obvious here is that momentum has really waned since the end of 2018. So in my mind, there is a decent likelihood, especially if we end up breaking from this, below this blue channel that you see here, that we might see a much bigger move lower in the DXY. So this is a second thought to keep here. The third one is that, as we were discussing before, the cable has actually broken above a huge descending wedge, which what I see recently is just corrective price action. I don't know if that's a bull flag, which we've already broken above and we're about to retest and move higher, or perhaps this is some other type of a consolidation pattern, like, for example,
a triangle.
Exactly, a triangle.
Yes.
That's what I'm.
From an Elliott wave perspective, it looks like a very nice setting up for a triangle. Actually, could be we're in a final part here. I will show it later.
So a wave 5, you're expecting a wave 5
yes,
out of it?
I'm expecting more upside, yes. Also, if anyone, of course, as you know yourself, anyone who is watching cable want or will probably expect something similar to happen on the euro dollar maybe. But
exactly, yeah, there it is, by the way.
Euro pound, you will actually see that on euro pound we could be building a bearish triangle there. Okay, so
I'm totally in agreement with you. If you see, here is euro pound. I've already drawn that in my chart because this is very clearly a bearish consolidation. I mean, I expect, and you know something else, Gregor? I'm pretty sure that you've already actually drawn that on your chart. A quality of this way, of this leg lower with this leg lower would be at 84.80. So I do think that it's very likely a breakout from this triangle to the downside will actually bring us to this key support area, not only because there is where we complete equality of the first move lower with a second move lower, but it's also a series of lows that we had back here in March to May of this year.
Well, so they're going to take them out then, Steve, if we're down
it's likely. Yeah.
Right,
Greg?
And probably even lower.
Yeah, exactly. Because as
and
Dale
by the
said,
way, hello, Wizard.
Hello, Dale. Nice to meet you again.
As Dale said, the market will almost never, do you the favor of reversing exactly where you expect. I mean, if a lot of people are looking at this zone, they're first going to take them out before the market can actually reverse higher. I mean, we've seen that time and time again, and I'm pretty sure that we will keep seeing this type of a behavior. Now, one more thing I wanted to show, so I don't monopolize the conversation here, and then you can take the charts and show us what you think from an Elliott wave perspective, is the Kiwi. Now, the Kiwi, in my mind, I know we haven't discussed this, so we're having this discussion live, Gregor. Now, the interesting part with Kiwi here, I kept saying since a long time ago that for me to turn bullish the Kiwi, I need to see the confluence of the 38.2% fib and horizontal support resistance area at 64.25 getting taken out and closing above it on a daily closing basis. Now, so far today, we're getting rejected from that once again. But if, and I say if we manage to close above it, that would trigger an inverted head and shoulders formation that the head was a previously pinpointed inverted head and shoulders formation. So we had already pinpointed that inverted head and shoulders formation as an initial attempt to look higher. And now we have a bigger inverted head and shoulders formation with the right shoulder still finding resistance at what seems to be the neckline. So go ahead and grab the screen and let me know what you think about it, Gregor.
You mean about the Kiwi in particular?
Yeah, let's start. Since I finished from the Kiwi, let's start from there and then you can go through the rest.
Yeah, sure.
So Greg is our Elliott Wave specialist. You know, I've interviewed many Elliottians over my career. In fact, interviewed well over 1,000 traders in the last several years. And I fade Greg at my own peril when I do that.
Yeah,
So,
as you know yourself, I just simply believe in Elliott Wave because I think it's the only method out there that is combination of both technical analysis and crowd psychology or sentiment if you want. So actually you have everything in one pocket, and that's why I'm just so fascinated about it, and it proves to me that it's working over and over again. I'm just loving it.
and not only my opinion, Greg, you when I was at FX Street, you won a few years in a row some awards on FX Street because
Yes, of course.
I had to interview you.
You know, it's not about me. It's probably because of community who found some value in our analysis that we share. So I just love to share ideas. I just love charting, just analyzing. So and it looks like that someone took some advantage of this as well.
So Gregor, what do you think? I see you have the DXY app. So
yes, I will switch it. No worries. Okay,
yeah.
so you know, when I was looking this on a higher degree time frame charts, you know, Elliott wave theory, it's all about tracking the markets in the direction that is moving. This is called an impulse. Okay, so when I'm looking here on the higher degree time frame charts, I'm not really sure what keyword it's going to do. I mean, it could be even in a bearish, breaking out from this bearish triangle. But what is key when I'm looking for a bearish continuation is that always when I see an important support or important trend line resistance broken, I want to see that same trend line to be retested. So if I try to match up this with your approach, with the head and shoulders that you showed up, then maybe this trend line resistance could still be retested, which comes in around 6,550, around there. I'm not sure where is your head and shoulder target.
6650 is a confluence of resistances, including the inverted head and shoulders implied target.
Okay, that would be in that zone, I would say. So let's assume that we are maybe now in a wave 2 here. Okay, we could still see some upside and then maybe turn to the downside. But I'm not really sure if even triangle is the right approach here, because I don't have enough of data to confirm that this is going on. It could be even this bounce from here to this rise could be labeled different. So always when I'm tracking in Elliott wave patterns, I will focus and maybe put a trade on the markets that are very clear with its structure. And currently New Zealand dollar is not one of it. Okay, so
okay, let's go to the ones you have high conviction of.
Yeah, I will take a look on, you mentioned the S&P 500 and that upper wedge, right? That wedge where you see prices approaching to the upper side. Here I have something interesting. Okay, so here we have put-call ratio, okay? It means that if this ratio is coming to the downside, it means markets, traders, investors are buying a lot of calls. It means that there is no fear in the market. Okay, but what we are seeing is that we are now at the bottom of this range from the last 12 months that I'm tracking. Okay, so it appears that if we consider what is going on back in this year, always when this ratio moved to the lower side of this range, actually market topped out. Okay, it happened here in April. It was been the case here on this spike in July. It's been the case for reversal here in September, and also look where we are now here in November. Okay, so I would not be surprised if really, Steve, we really see some limited upside here on the S&P 500 with this.
Gregor, let me add to this that if you pull up the VIX, the daily VIX chart.
Yes, I have it here. We are at the lows. Yes.
Oh, not only that, go ahead and drag a trend line from the all-time low that we had there in the middle. Yep, that's it. There you go.
Yeah.
So not only we have an indication from the put-call ratio, as you correctly indicated, but we're also testing an important trend line support, which is also showing divergence because we keep getting higher highs in the indices, while at the same time the VIX is telling us something different. So combine all those together, and I do think it's quite a nice, alert signal, right?
Yes, I mean, we obviously could see more upside from here, no doubt. But always when stock market is trading at such extreme levels that we are seeing right now, just let's say that we get 2% sell-off just in 24 hours, there will be a lot of fears, and these weeks will just pop up extremely sharp. So I'm thinking that we should be aware of potential correction, not a top in place, but at least a correction for the next few days, maybe few weeks. So if I go to the wave count of the S&P 500, actually I'm tracking few different wave counts, and both suggest that we could face some limited upside here. Now, the first wave count is actually potential ending diagonal still in progress. It's an ending diagonal that can occur in a fifth wave position. Now, looking at a monthly chart here, to give you the perspective, we can be here in a fifth wave. I have different targets, which is okay, but because obviously maybe it's not an ending diagonal, maybe it's something different. But we are here at the first target for this potential fifth wave. So looking at the daily chart, okay, we are at some important target on a monthly chart, and on a daily chart, we are also seeing that market is moving into some interesting resistance here. So from an Elliott wave perspective, be very careful up there. That's the first wave count. The second wave count that I would pay attention on is this one. Okay, it's an expanding triangle that could be building here in a wave 4. This could be wave A, B, C, D, and maybe we'll see a wave E. I didn't update this count since last month, but anyhow, if that's really going to be the case, then again, wave T is at important levels. So
that's a megaphone pattern using different terminology people have been looking at.
And
yes.
I know, Gregor, that
we currently have a throwover in the making.
Yes, and of course, I'm also.
I know, Gregor, that fundamentals are completely irrelevant to account. Anyhow, the basic principle behind technical analysis is that, anything fundamental that the market wants to take into account, it's in the price. But being so late in the business cycle, I find it almost impossible that the second count, a megaphone formation that can take us down to almost 2000, can actually happen so late in the business cycle and not trigger a recession. So in essence, not, recover from there to new highs. You know what I mean? Yeah. I know that it doesn't matter that much because it's still a valid count and you're doing very well for showing it.
Yeah, of
but
course.
my 50 cents, we are too late in the business cycle for that pattern to play out and then manage to push to new highs.
And actually, I have here then another wave count, okay, which could be a flat. Let me just see. We could be in a wave 4 flat correction. Why I'm looking at a flat correction as a potential idea, which would maybe someone say that, hey, it's too early to say that we could be in a flat. That's why I'm actually tracking different wave counts. But because one interpretation may suggest that we are moving out of a triangle. So if it's a triangle, it means it was a wave B. If that's a wave B, then it means you have a free wave structure moving to a new high. And always when you're seeing market moving to a new high in free waves or to a new low with free waves, it typically suggests that it's part of a complex correction, especially if you have in previous decline also such a nice free wave structure. So I would not be surprised if, again, based on this scenario, we have limited upside. Also, what is very important when we are moving out of a triangle, it typically means that we are in a final piece of the puzzle of the larger picture, which means of the larger trend, and this trend obviously should be then tracked from here, from December 2018 lows. Also, again, we see a very similar price action moving sharply to the upside into the year end. And as you know, at the year end, then or at the start of the next year, again, the cycle will change. So I would not be surprised really if we see some limited upside as we move up into these levels. Of course, this wave count have some more room for further gains from here, but basically it's a very similar thing. I think that for myself, it's really too late to look on the S&P 500. I definitely would want to see some kind of a correction, and then, or at least a pullback, and then when I will be able to identify if this pullback is corrective, then maybe I will again join the uptrend. Okay.
Perfect. What else?
Okay, what else? I will take a look on the 10-year US notes, okay? And the reason why is because there are a lot of traders now wondering what is going on, as you know, what is going on with gold, right? So I'm just looking at the 10-year US notes and thinking that 10-year US notes is in a corrective phase, okay? When this market is moving to the downside, it's probably also a reason why the stocks are rising with, obviously with yields, because of yields. So the key point will be what will happen if this pullback is really going to be corrective one, in an ABC move. So I would be very careful, again, for potential top on the stock market, on the S&P 500, once we reach on the 10-year US notes, those levels from July swing highs. It could be actually a very nice support, technical support. Then you have a rising trend line, then you have a 38.2%, and you will have a 3 waves drop, which in Elliott wave terms, it suggests it's a pause with an ongoing uptrend. So when this market completes this pullback, that's when the stocks could actually face resistance. And at the same time, this could be a new wake-up call for gold. Okay, as you know, gold is now slowing down, but it's trading perfectly for the 10-year US notes. So what I see is that 10-year US notes are in a wave 4 and that gold is in a wave 4. So if I look on gold, you will see that there's a very nice potential, just a slow pause here on the way up. I know
Same thing with silver, by the way. Exactly
yes,
same thing.
Yes. So the only question is, what type? I'm tracking here. Let me check the daily. I'm tracking here on gold 2 interpretations. It could be a triangle, full triangle for wave 4, or it could be a triangle in the middle of wave 4, and we go to a little
As a
bit
B. So the triangle being B in this case, right?
and we go higher after wave C. So what is really interesting here, that if that's a triangle, then both interpretations at this stage suggest that gold didn't make a top here. And if that's the case, then we know that 10-year US notes, because of positive correlations, are probably also in a wave 4 movement. And this is another reason why I think that stocks will face the limited upside. Okay, so I'm just waiting on some signals from 10-year US notes maybe to spike down, with stocks maybe will make another push to the spike, very strong push to the upside to attract even more buyers before we turn. So I'm waiting.
Be about 190 to 2% 10-year yield, right, Grega?
Yes, as we discussed already in one of our past webinars, around 2%, I think, if I remember correctly. So I'm just waiting on 10-year US notes to give me a signal that market has bottomed there, or at least it will turn to the upside just temporary. That will be a timing when gold could actually break out. So on gold, as I said, looking at 2 wave counts, first here's even better picture. First is triangle, or the finished here in a wave 4. You will wait on a decisive break to the upside on a daily closing price. That's a very important level, very important approach. Above 1517, okay? Until then, if we stay just sideways, then obviously this wave count is also still valid, where wave C could still come into the play, okay? So you also covered cable. We mentioned we mentioned triangle earlier. So just to give you the perspective on a daily, it's not the perfect wave structure, okay, but what is really important at the moment is that I think that we are going to see further upside back towards this September from 2018 and from March of this year levels. So I'm looking for these prices to be retested. I have actually two wave counts. The first wave count suggests that we are in expanding triangle, and the second would suggest that we are making a flat. Okay, so in a flat formation, what you would see is that wave C will also move back to the starting point of wave A. So you can see the flat formation. I have alternate scenarios here. So it is the same thing. Both wave counts suggest more upside. And when looking at the 4-hour chart, what I see here is actually a strong move to the upside and a pause. And since I cannot count any impulsive bearish count here from recent highs, especially if you look at this hourly chart here from
More pain coming.
First, yes, it means that this was a corrective drop. So if I just double it here real quick, it was an ABC down. If this was a corrective drop and then we rallied and then we are back to the downside, there was no progress higher yet, it means it's a complex correction. And triangle is probably the best idea at this stage. We will see what will happen tomorrow, but so far it looks very, very interesting. And as I said, I'm tracking a lot of different markets, and Europound actually suggests the same. We are also there looking for a triangle. So as you said yourself, we are, Steve, we are looking to the downside, expecting more weakness to complete this 5-wave sequence that we are tracking from start of August of this year.
Perfect.
Good stuff, buddy.
Thank you.
As always. As always.
Okay, so actually I'm just observing what I went through. These are my key markets for this week, and if I will get some confirmation of what I'm looking at, which means if the price will confirm my bias, then maybe I will move. For example, I'm interested in cable, but I will wait a little bit more.
Perfect. Thank you, Gregor.
Thank you very much.
Coach, who do we pass the baton to?
I'll pass the baton to Andre.
To Andre, yes.
Andre
Hello,
Picasso
everyone.
from Portugal is on deck.
Hello, everyone.
Hi, Andre.
Hey, Andre.
Hello.
All right.
Good afternoon. And
Everyone put their sunglasses on. These are the most beautiful charts you've ever seen.
No,
in your
Dale
life.
It's joking. Huh? It's joking. It's joking.
Okay. I know you're going to end up in the Art Institute with these. Go ahead, buddy. You have the screen?
Can I take the screen?
Yeah. Oh, go ahead, mate.
Okay.
Does Greg have to stop sharing?
Shouldn't, because I promoted everybody to co-host, so should be okay. Yeah, there you go.
Can you see my screen? Okay. I have a very small presentation for our guests, for special guests today, so I want to introduce myself. My name is André Cardoso. I'm from Portugal, as Dale has mentioned. I'm 42. I'm the less experienced in our team, so I started to trade my own account a few years ago. I'm connected with the market for 10 years or something like that. So, but not trading, learning how the market behaves. So then I started to develop my own trading strategy supported by patterns. There are a lot of patterns inside the market. I decided, and I feel comfortable searching for reversal events. So at the same time, you are positioned in a trend, or in a bullish trend, I will call your attention for specific potential reversal Fibonacci and Fibonacci levels and price levels supported by those patterns. So basically, what you will search inside our platform on my harmonic trading section is two types of patterns: basic and advanced patterns. We can divide those patterns into different sequences. So let's say basically the BAT patterns and other patterns, harmonic patterns and price action patterns. So basically I divided those into two different categories. So the heads and shoulders, double bottoms, as some of you are familiar with, cup and handles, 2618 is one of the setups that I introduced inside our community. So there are a few examples that I want to show you for heads and shoulders formations, some of the patterns that you'll find inside the market that I tend to identify them and I tend to share them among our community. So those are just a few examples, old examples for sure, but it acts as the educational content that I use to share among the communities. So then we have also what we can call this still in price action patterns. So those are visual behaviors, visual patterns. We don't need to measure. We don't need to push a tool or a Fibonacci tool to measure those patterns. That we can identify those patterns visually. And then obviously we need to identify those breakout levels and try to predict where the market will trade there later. Cup and handle formations or inverted cup and handles. There are a lot of examples of those patterns, and the 2618, which is nothing more than a double bottom or a double top, followed by a pullback to the golden Fibonacci. In this example, a double top, it needs to find a support. First, it needs to be validated with a broken neck. It needs to find a support, and then we will see the pullback to the golden Fib, which usually will offer us a nice opportunity to go short after a double top. So we wait for the 61.8 retracement to trigger our trade. This is a weekly time frame chart for CAD versus yen. You can go check this chart and you'll see the price is already trading below. So this was the one of the most recent higher time frames charts for CAD versus yen. We are now already trading below. So the market has found some resistance at the golden Fib, and then it has started to fall. Another example for dollar versus Mexican peso, it has found some nice support last March or April, I believe. And the market has started to bounce from this level. So there are a lot of examples for those patterns, and I tend to share those among our community. So I welcome you all to follow this journey. So then we have Fibonacci patterns, and some of you are familiar with those, some are not. Harmonic patterns, the BAT, the Gartley, the Cipher, whatever you want to name it, but those are the default patterns I tend to search for inside the market. The BAT pattern, a lot of examples for those patterns also, some of them not completed yet. At that time, this was a chart from March 11, and we have a lot of patterns. The market, actually, I feel very comfortable trading them because I know the completion point. I know where they will complete. I know the default target for that pattern. I know the pattern tends to search for the 38% Fibonacci retracement as a first target, which allows me to identify my limits. I never enter the market to lose more than what I expect to win. So that being said, I search for a potential reversal Fibonacci level to trigger the pattern, and I set my stops below those completion points. Obviously, some of them will work, some will not, but the risk that we take considering those the default targets for those patterns is we always engage the market with a friendly risk-reward approach. Gartley patterns, also some of you are familiar with. Another very nice example on pound versus on cable, actually pound versus USD. Another one for gold on a 2 hours time frame chart. The market has found some nice resistance at 127 extension. All those patterns were shared among our community inside the ForexAnalytix. Obviously, cipher patterns, another pattern that I tend to trigger because the reliability for those patterns are tremendous. So with a very small risk, we can try to maximize our profits. There's a lot of examples. Also another one on a daily for dollar versus Mexican peso, finding some nice support at 78% Fib. So on. And we have a lot of examples for those. The crab pattern, just a few examples, a very fast approach, completed patterns. And the shark pattern, also another harmonic price behavior, which tends to react from around the 160-180 extension or the 224% Fibonacci extension. So those examples for a shark pattern at 224% Fibonacci extension projected above. So there are a lot of patterns there. I always search for the basic ABCD pattern, with the most common three-wave structure price behavior, which tends also to offer some nice opportunities to get involved with the market with a friendly risk-reward approach, obviously. And let me try to, I believe it will finish with these butterfly patterns, the one that finishes, that completes at 127 Fibonacci extension. As always, don't count on only your pips, count your blessings, as Dale Pinkert likes to mention. This finishes my introduction here on regarding those patterns. Now, let me go into a fast approach for S&P. And because we were mentioning about the possibility for a pullback, let's say for a pullback, I never take in consideration big moves when I search an event on a lower time frame. At least this is a 4 hours, 12 hours daily time frame chart. So what I have here is only a projection. Nothing assures me the market will go there. The market will trade at 31.28. This is the 168 extension from this last swing low. So this will complete, and considering the Fibonacci ratios presented, if the market trades there, if the market decides to approach that trend line covering those highs, eventually we will see that bearish crab pattern printed above. So by default, it's a pattern that will offer me a nice reward. So considering that I will expect a pullback into the 38% Fibonacci retracement, which is actually which will force the price to retest those fractal, those monthly, weekly, and daily fractal resistance, all broken at this point. Nothing assures me the market will retest those fractals before achieving or completing that pattern. But I know what to do if the price decides to print the pattern for me. Until there, I stay quiet, I stay aside. If the market decides to offer me that possibility for a pullback, I need to go into a lower time frame, chart once the price approaches that level, and try to identify the best moment, if possible, to go short. Obviously, it's a pattern that will eventually be limited for a downside momentum. If that happens, eventually we will find a nice support here and a pullback again, for those who are searching for longs opportunities, of course. Let me go into some of those charts, because we have also shared our views for cable. And this is one of the examples where I call your attention for the potential reversal when everyone is expecting, and including our team members, we still expecting the cable to trade higher, to trade above, and to break these fractals, these weekly and daily fractals above. But we are also trading the 113% Fibonacci extension, and it seems like we're still rejecting that fib. So eventually a complex sideways or consolidation period is now forming at this point, which will, and I will not ignore the possibility for the pullback to the 126, the 38% Fibonacci positioned right there. So this is the default target for the pattern. I will not be surprised for that to happen. If that happens, the same way, obviously, I will not be surprised to see. I never get surprised with the market. We are here for so long that I never get surprised with those charts. But just to call your attention, we are trading that Fibonacci criteria, and eventually the market will trade those levels. At the same time, on a daily, or let's go into a 12-hour time frame, for those who are not familiar with my time frames, this is one of the time frames that I use between a 4 hours and a daily time frame. I split those charts into a 12-hour time frame. I see these, and I only trade what I see. I don't start to project the prices above or below and start to engage the market based on those expectations. If I have a pattern that forces me to engage the market into a bearish momentum, I will do that. But at this time, there's nothing that triggers me that momentum at this point. So what I see at this point is an eventual technical double top. And I say a technical double top because the market is rejecting to close above the previous highs, retesting the previous highs. Obviously, we have a next zone at the daily support, fractal support, 110,730. So this is the next zone. And this is the default projection for that trade. So this is my default projection for the trade. If the market decides to break that daily fractal, this is the default target at 1.0985. So this is the 200% Fibonacci extension from these highs to these lows. I'm covering those close prices from the top to the next zone. So this is what I tend to search for. I always like to identify the patterns above and below at this point. If the market decides to trade this zone again, I will start to project patterns below, because if that happens, eventually the market will print me a default, eventually a default bullish bat pattern at 88% Fibonacci. So if that happens, we will see if the market will be pushed below, and if that happens, we will start to identify one eventual bullish bat pattern at 88% Fibonacci retracement. Until now, nothing of this is real. I like to wait. I need to wait for that to happen. What we are seeing now is a retest or a threat of this ascending structure, or let's say we are approaching this ascending structure trend line support. And the 200 moving average also. So breaking below that trend line, or breaking that trend line and trading below that 200 moving average eventually will reinforce that idea, validating and eventually validating that technical double top formation, which will increase also the probability to trade lower. Then we have euro versus pound, and I see a different. I don't need to see a different pattern or a different. I don't need to create expectations. What I have here is what I see. I see a bullish scrap pattern printed at 168 extension, and I have default targets at 38% fib. I know we are trading inside of a sideways moving process, but it's not the first time that I see the market moving sideways, and then suddenly the market pulling back 38% fib, and then new lows again. That will not, let's say, that will not vanish with the bearish momentum. The bearish momentum is still here. Actually, we can start to draw one eventual parallel structure at this point, and eventually a retest of that trend line resistance, achieving those default targets for the pattern. I will not be surprised with that. So at this point, I trade what I see, and this is the bullish crab pattern. So I can't ignore the pattern formed at this point. It's there for everyone, and we just need to decide what to do with those patterns. And sometimes a pattern is printed, and I need to avoid the pattern because it's not the best moment to engage a specific pattern. As some of you already know, I pushed one trade for that pattern as soon as the market started to print this triangle shape, or this moving sideways and taking so long for a pullback or for a bounce. Actually, I decided to exit my trade from there. I want to call your attention also for Dixie, and that will complete my introduction. I invite you to check all those charts, on the harmonic sections. You'll see my previous charts and the most recent ones that I pushed updates actually today. You'll see a lot of those patterns during this bullish momentum, or inside this ascending structure. We have at least 4 or 3 advanced pattern formation that I published inside our community. Let me try to push those charts for you. For Dixie, and let me show you just one example. So this was one of the charts that I published for the ForexAnalytix. Actually, this is the one that I don't want to show you because this is the most recent one. This is the one that I want to show you. As I said before, we have at least 3, 4, we have 5 patterns during that process. We have 3 there. We have a weekly, we have another chart on a weekly time frame chart. We have a weekly bearish shark pattern printed at 99.14, and I published that chart also before the completion point. The market has decided to respect that Fibonacci criteria and decided to start to fall. So at this point, we are trading already, we are reinforcing or bouncing from the weekly and daily support printed at 97.14. Well, projections just at 96.66. See, though this is the 78% Fibonacci, we have a small confluence between a golden Fibonacci reversal extension and the retracement, the 78 and the 168 extension. So at that level, that will print me one first bullish shark pattern. This, what we are seeing at this point, may act eventually. It will act as a double bottom eventually. The same way that I share with you the double top on euro versus dollar, eventually we will see this acting as we can see this acting as a potential double bottom formation, the next zone, and eventually projections above. So I will not be surprised to see Dixie being pushed a few points higher eventually. Obviously, we need to wait for a validation of the pattern with a breakout of this fractal at $98. So this is the next zone. And well, I invite you all. I really appreciate your presence here. I hope you enjoy our insights inside the market. And be here every day on Face. It's a free webinar, the best that you can find for sure.
Thank you, Andre.
The internet. Thank you very much, everyone.
Thank you, Andre. I just want to remind everybody that for TopStep traders, we are offering a promo of a 50% discount for a monthly subscription. There are other options, but the promo is for the monthly. And if you like it, you could stay and it'll be at 25%. Yeah, the link is in Zoom chat right now.
Yes.
And if you like it, you'll get it for 25% discount from full price thereafter. Yeah. And also note the link that has ForexAnalytix Zoom on it to attend our daily webinars that begin at 8 a.m. Eastern Time to 9:30 Eastern Time. Yes. Okay, Steve. So Paulie, is Paulie going to drop in and share his bias chart for?
Yeah.
I know a lot of day traders at TopStep, and Paulie's probably right up their alley. You can get Paulie's analysis as a member. So Paulie's trades and technical areas, I've watched them. Markets react to them, and I pay attention to Paulie's work. So, Paulie, welcome. How are you, my trading warrior brother? Are you there? Oh, he's probably in his Porsche.
You had
Paulie?
to say that, right?
Huh? What?
You had to say that.
Paulie, parked.
I'm here.
Oh, there you go. Okay, are you parked? I don't want you trading when you're driving anymore. Okay. All right, buddy. So, Paulie,
I think you have to unmute this. Well, whatever.
No, we can hear you.
Yeah, okay. I'm talking about so that I can
Screen?
grab the screen.
Okay. Did not start. So it was actually Andre. Well, Steve's handling it for you right now.
It's on Andre. Let me actually, okay, let me grab, yeah,
There you
there it
go.
is. There you
Okay.
go. Now you can
All
grab
right,
the screen.
Paulie.
Sorry.
Okay.
That's okay.
No worries,
All right.
Andre. No worries, mate.
Go cook.
Okay, you can see my screen, right?
Yeah, Paulie,
Andre's also
let
a
me,
very good chef.
yeah, let me just say that Paulie is one of the two short-term traders, like scalpers, we have in the company, along with Amanda, and they're both excellent in what they do. Paulie, I think you should also tell a couple of words about the other two webinars you do for ForexAnalytix subscribers, and go ahead and show them, you know, the bias chart, which I know a
There
lot
it
of people
is.
find very useful.
Yes, to give you a good little bit of a background is that I host the European crossover, which is at 4 a.m. Eastern, 3 a.m. Central Standard Time. And on that webinar, we actually we do the bias chart every day. You can see here, we generally list out the scalp levels. We gave a little bit of a wider space today for some of these markets. You can see here that the cable looks like the low for the day was what, 28.76. Our bias chart support we're looking for the cable was potentially down here to 28.63 in the pink line. But what we do is we actually go over the majors as well as the cross rates. We also cover some of the markets like oil, and the focus is primarily on short-term trading. We set up some scalp levels, and I'll touch on the other webinar that we do, which is at 12:30 Eastern time, which is called the FX Daily Roundup. Actually, today in the FX Daily Roundup, we were focusing on crude oil today. And one of the reasons we were focusing on crude, although I spend a lot of time with FX, is because, and I shared this chart on Twitter also, but of course in the chat room, is that we, if you look here in the actual futures market, this is on the CFDs, we had on a 2-hour chart, we had actually come up with a gravestone doji. It's a little bit more pronounced on the futures chart. And it actually had come up and taken out a key level, which was 57.36, and rotated lower. The key thing there was that this was actually confluencing here with a major level we had here, 57.15, as well as the 57.14, the 50%. I think Steve mentioned it on the FACE webinar. So one of the things that we focus in on, and just to give you just kind of like a real-time notion, I'm going to go in and switch into another chart quickly. And so we were actually looking for this market, and we talked about that in the webinar, the FX Daily webinar. We were actually looking for this market to sell off into the pit close. And we actually rallied back up here into this 57.30, and we sold off, you know, I don't want to say real hard, but we sold off, and actually we came right down into what I was sharing on Twitter was some volume support. We actually exceeded that. But the point there that I wanted to go and share was that each of the guys on the team have their expertise and levels, whether it's, you know, Andre with harmonics, Greg with the Elliott wave, Blake with his basic technical, you know, Steve and as well as Stelios, they have Stelios more of a macro outlook, and Amanda and we focus on short term. Matter of fact, Dale had mentioned about a couple traders, or a trader who's milked, you know, the cable. Well, that's been Amanda. She's been basically killing it in the cable all the way down, rode that pony all the way down for all it was worth. But for us on the European crossover, and that may interest some of those that are here at the webinar, we focus on the short term, very short term, pronounced scalp levels for the day. Our scalp level, or our scalp support today for the euro, you can see here we put together a bias chart every morning when we do the webinar, and today we have our bias chart support here for the euro to potentially come down here to 11.18. We actually, usually our ranges are not that wide, but because of Monday and the way we closed on Friday, we thought we might get a little bit of a wider range here in the euro, and I guess we're getting that to the downside. You can see this market coming down lower. But the primary focus in the European crossover is I stick just to the basic technical analysis. And I'll just give you an example, like on the cash dollar index, what we were looking at for about the last couple of weeks was when this market broke, just basic technical analysis. We were looking for a move down here to 97.89, which was that big weekly breakout that the market had so much trouble throughout the summer getting past, and finally did. And on the way down, we thought, okay, we're going to make it to 97.89. We'll get a bounce. I was expecting a decent bounce from that area. So we got to the 97.89, and the best we could bounce was 21 ticks. So when we broke below that, we were stating in the webinar, hey, look, this is going to be a sell no matter what. The only thing that's going to change this is if we get a weekly close above 97.89, and that will only negate the downside picture. Well, we rolled over, and you can see we last week spent the rest of the week going down with obviously the euro going up, which is another case in point that I wanted to go and share. Is one of the things that we look at in our analysis is we had talked about when the euro was rallying, began its rally here was when we were looking at the bunds, and we're looking for the potential here. It's one of the markets that we do follow. And we said, be careful, because these bunds, and I know Steve was also looking at this. I said, this market really looks like it's going to break. And I remember this is when we did we're focusing on the webinar, and I said, boy, if it breaks this pink line, we're really going to start to go south. Now, we went further south than I would have expected, but here's the deal. The bunds are what led the euro on the way down, and the bunds have been the one who has led the euro on the way back up.
Right.
So today, obviously, the euro is under some pressure. We do focus a little bit on some stories that come out each day, kind of gives us the flavor for the day. And we are seeing, obviously, one of the concerns was Lagarde's giving a speech, and she that considered uber dovish that the euro came under some pressure. But we do have some support here coming from the euro with the bunds falling, which obviously rates increasing. I think we'll probably see the euro ultimately going in and recover here. Obviously, we're coming pretty close to our bias chart support, which comes in today at 11.18. Now, like I said, we do this bias chart each day when we do the webinar for all the majors, and then we also do the cross rates. But we do follow other markets, i.e., as I mentioned, crude oil as well as gold, and then we just take a look. We do take a look at the S&Ps. We do follow it a little bit more closer. Sometimes I mention the levels in the chat room, and the webinar will touch a little bit on it. But as we start the day from time to time, but another focus was here on the gold when we were looking for this market potentially on Friday to run out of gas at around the 15-17 area. And that's actually where the market ended up running out of gas. We're rallying at the time. And I think our number was 1509, but I said, hey, we may be able to push this market even further, potentially to 1560. And you can see our pink line right there. And we saw this market, come down, and then we saw this market come back up. Now, this is where we had run out of gas previously when it made that move down. It fell much further than what I had expected. But as I mentioned, our focus is primarily on short-term trading. That may interest those that are watching the webinar. Our focus today, when we did the FX Daily Roundup, it's generally about a 15-minute wrap-up. Sometimes it'll go up to half an hour. But the key thing that we actually started on and finished on was on this on the crude oil. And we were talking about, hey, now that we set up this level, we even mentioned, as we go into the pit close, we may see this market really start to sell off, and certainly it did. It did go in and sell off. So, but as I mentioned before, is we do go on and have our the main thing for us in the European crossover is that we lay out what we're looking out for the day. We try and set up the scalp levels for the market, and when we're looking out for our own analysis. So, case in point, look here with the peso. We've seen the peso actually come back, ripping back. And let's see, let's pull this up. So we start out with an overview, and even though we focus on what I look at is the 2-hour charts, that's my longest term that I look at other than a daily, and then a 2-hour and a 5-minute. So, but we talked about, as I said, I keep it simple with the basic technicals here. So as we start out the week, we do our analysis. It's available. I do the basic technical. Blake does that, but I do it at the beginning of the week for the markets that I'm covering, which are the majors and some of the cross rates. And then each evening I'll do that for the Asian market, Asian analysis for the majors. And then we go over things, obviously, for the majors and the cross rates as we come into the European crossover webinar. So the analysis we had coming into Monday was the dollar peso has thrice turned away from the breakout area of 1923.6, closing below 1912. The failed move suggests a test of 1892, resistance is 1920 with support, and that's coming in today, 1906. Well, when we did the bias chart this morning at 3 o'clock in the morning, the peso was actually on its lows. I said, you know what? That's close enough. That's good enough for me. Our bias chart support today is going to be 1904.6. Well, that was actually the low right there for the move, and obviously we've made a run. But our resistance today is 1916. We're trying to push back up here towards this 1923.6. The peso's been has had its woes in being unable to get back once we lost this key breaking level. But the focus
maybe the fact that it's holding, Paulie, could be a tell, as Blake has said, for risk off coming. Being a funding currency. Do you believe?
I heard that from earlier,
Yeah.
and that may be the case. I mean, I know that it's just been a week, and some people are trying to pick this up. And to me, it was one of the things that I learned from Blake. A lot of people have learned a lot of things from Blake. And I'll give you an example here. I really was pretty bearish on this thing. You'd think I had a bone to pick, and I hadn't even traded this market in over 2 months. But was here on the looking at the structure of the market, and as we had broken out above this 1923.6, and we started to go in and pull back, we finally held here at the 61%. And I thought, okay, well now we're going to be able to go and move up, and we actually get up to an area that we were looking at for the market to go on and take a pause at, which was right around 1985-ish. I think it got up on 1986. And when it dipped back, I thought, okay, this market is going to go on and now can reassert itself as we find some support. But when we broke the 1944, I turned exceptionally bearish because I said, this is just, you can forget it. This is done. It's over and done with the bulls. I thought we might even get a bounce for 1923.6, but once we got that close below the key breakout, which was a pivot, and that's why I have it in red, we really stayed under pressure for the longest of time until now we've tried to.
So now we're challenging it. If we close above it, what's your thought?
I just think that it's just a little bit of a little bit of short covering, and that's it.
Okay.
Because like I said, my take was that it disappointed so many people, and you would have thought I had a bone to pick, and I didn't. But I became so disgusted with this thing from a technical standpoint. Because like I said, even though I hadn't traded it, I thought, okay, well, now we're finally going to hold, even though we held the 61% area here, and there was a key level here, which was at 1930, I thought, okay, now we're going to make a stand. And when we fell apart, I said, once we got past 1944, I go, that's over. It's done with. Bulls are going to throw it all out. This thing isn't going to go anywhere, but it has stayed weak. But you make a good point, or you and Blake, about potentially it may question as to what we can do on the upside. But on the once again, just to recap quickly, is that on the European crossover webinar, we stick to the basic technicals, but we set up the scalp levels for the day. And as Blake had mentioned, we have plethora of traders, and many of them do not necessarily scalp. They may hold it for a medium term, some may day trade it, some may just hold, maybe sometimes a scalp. But what they do is they use this bias chart to go in and combine with their own analysis, potentially for entries or exits. And that's what we go on, what we focus on is, from on the European crossover webinar, setting up these levels for the day as to where the market may go in and break out to. And potentially here, you see the cable still slipping. Well, we've got our bias chart support today in this pink line right there at 28.63. We may still get there. And look at the euro. We're looking for 11.18 for our bias chart support. Once again, what we mean by that is it doesn't mean, okay, that's exactly where the market's going to go to, but we do expect to find some demand at that level. So if you're short, you're probably looking to go in and cover at least part of your position. Maybe you cover all of it, depending on what your outlook is. Same thing on the upside. So as the cable is breaking lower, the cable's been holding real well, but we would look for some demand, at least for today, to be coming in at this 28.63. So if you've been playing it short, you're going to be looking to go in and lighten up some of the load, at least when you get towards this 28.63. If we break it, who knows what will happen at that point. Same thing with the peso. We've made so many jumps up here, but we had a resistance at 1916. it's a previous resistance. So maybe they can get beyond that, but each time it's continued to go on and fail. Another one that we look at, and I'd mentioned, and you and I discussed this many months ago, or my dad used to say many moons ago, was, and that was some time ago, was the 927 on the dollar peso. And we talked about when it was on the way up, on the way down, on the way back. We talked about the significance of this level. And you can see here on as we came in last week, post FOMC, post BOJ, here we are. We went and failed again with a gravestone doji right here at that bias pivot of 927. Had the market been able to close above 927, we would have gone to 1050. So one of the things that has kind of etched in my mind is that, how do gentlemen say, which is so, well, obviously so true, trading is really just about probabilities, because, you know, we're all going to be wrong multiple times. You have to go on and manage your positions. We say love your losers, because your losers will go on and keep you in the game, keeps your count so that you can still play the game, so to speak. And so the thing is had it gone above 927, yeah, then the door would have been open for a big old move to 1050. But we once again failed, but it set up a wonderful risk reward. I think even Amanda, who was short, actually added on to her position, and we got to 928. So we took out this about 1 pip, and by the end of the day, we were already sub 109 at the time. And certainly you can see where we accelerated down to. So that's what we focus here on the, and the analysis that I provide in the European crossover webinar is, it's the basic technicals, but we look at the levels and we combine those with Fibonacci and some short-term trading outlooks, like I showed you on the volume analysis in the crude oil market. We also had up some great risk rewards on the gold market this morning using that same volume analysis. And that's what our forte is, just to focus on the short-term levels and providing the bias chart where traders, even if they're not short-term traders, they can incorporate that bias chart into their entry or exit levels.
What a great tool, Paulie. I tell you, man, if I could wake up earlier, I'd be in there. Right now, 4 a.m. on the West Coast is pretty tough for an old codger like me. Anyway.
Excellent though for us Europeans. Excellent.
Yeah. So anyway, TopStep traders, warriors, you've seen the majority of what people on Twitter call the dream team. I don't call us a dream team. I call us a bunch of hardworking guys, and our mission statement is to build up and edify traders every day. And we lay it out on the floor for everyone and give you our best. And also we're rooting for you. Okay. So we believe in building relationships and retaining a client base by doing our best work every day to help you survive at first and prosper later. So, Steve, you have anything you want to say to wrap up this presentation?
I want to thank everybody for being here, and I think it was, excellent. Thank you very much for having us, Coach.
Yeah, and I want to wish all of you guys a lot of success. I hope pips rain down on you during this fall trading season, sets you up for a nice holiday season, and perhaps we could be another arrow in your quill, another tool, a place. I'm a big believer in intelligence gathering. We all have to do our own work, but, it does help to surround yourself with people that have great ideas, because you know what doesn't show up in your account? Trades that you don't take that would not have worked. It doesn't show up in your P&L, but avoiding bad trades is just as, or even more important than being in good trades. So remember, don't just count your pips, count your blessings. Thanks for having us today. Good hunting the rest of the week, and we hope to see you in face and in our private members chat. So wish you guys all the success in the world in your trading careers. That's a wrap. You're very welcome, Eric. It was nice meeting all of you. Say hello to Mark and Danny for us, and perhaps this can happen down the road again. So, Steve, I'm going to end the meeting. I want to thank the Dream Team, my compadres, and I'll see you guys tomorrow morning early for Turnaround Tuesday. Adios.